afternoon. This is Ankita also joining in. Mr. Subramaniam, let me come to you then. In this market, what has really held the fort is the FMCG pack. In fact, the sentiment was also buoyed by the results that are coming out, whether it's HUL, a good outlook also. We do see a volume pickup happening as well there. So the entire FMCG pack, also because it's domestic facing, is that going to be the theme going ahead? Because tariff has caused a lot of trepidation in the market in any case. So does FMCG consumption, does that look like a safe haven?
See, right now, yes, because I think in the weeks before, FMCG has not been performing. So from a relative value perspective, being a pure domestic kind of sector. Second is that, no, you saw that the commodity prices are generally easing. So FMCG is a huge consumer of commodities. So the expected thing is that sales volume will pick up, but the margins should also shore up. Third is, of course, the overall monsoon. You're seeing the effect of the monsoon even on two-wheeler sales. So I think that monsoon definitely has a positive impact on the bottom of the pyramid customer, right, in the rural areas. And FMCG, as you know, is largely also driven by the rural-oriented sales. So the positive outlook for the rural economy, I think, is translating into the FMCG pack. And the reason that it's holding fort here, though other consumption-related sectors like realty and auto are under pressure, is because it wasn't performing in the weeks before. So there is a kind of catch-up rally happening there. But looking forward, I think that since our entire consumption pack, whether you take it as consumer durables, you take it as auto, you take it as realty, or you take high-end retail, I think all of these are insulated to some extent from the tariff-related concerns. And so there will be a buying stepping in there. Now, what's happening here is why they are also still correcting is because, see, domestic fund managers are the ones who have to support the market, right? But what's happened is that since April, May, June, I think they have put in 60,000 crores in the month of May, in the month of June, and the month of July. So you look at it, 2 lakh crores has been deployed by DIIs from April, May, June, July. So to some extent, I saw that the mutual fund cash balances, which have spiked up to 7.5%, has come down to around the 5%. What I'm saying is there is still some cash they can deploy, but a lot of it has already been deployed. So today, because of the FIS selling, if fund managers want to buy, even yesterday you saw there was 5,000 crores of FIS selling and 5,000 crores of domestic buying, but still the markets were under some pressure. So the point is that domestic fund managers have a less room to go and buy whatever they are positive about. They can only buy that which the FIs are selling. That's the second point. The third point is that they're also being a bit smart and waiting for some correction to happen before buying what they want to buy anyway, but not stepping in today because they know that there is pressure from the tariff-related FII front. So they're just waiting it out. So the volatility will continue, but ultimately, domestic fund managers will step in and buy domestic-oriented sectors where consumption is obviously top of the line, but I also draw attention to capital goods.
That's
because
right.
You saw the electricity numbers indicating that this, and if your consumption improves at the bottom, like two-wheelers, then capacity utilization will go up. Because so far it's been K-shaped consumption. And that doesn't help the numbers. It has only helped the value.
But correct. Sunil, I hear you there, and a little more we will talk on the same as well with you. But Rajesh, one more sector which I would like to discuss with you. Pharmaceutical space was doing really well since last 2 weeks, and then came up the news, Donald Trump again. He demanded drug companies slash US price to blow to industries. Trump did escalate his campaign to pressure pharmaceutical companies to lower drug prices to the extent that he was sending letters to 17 of the world's largest drug makers, demanding they charge the US what other countries pay for new medicines. Now, on the back of this,